Good morning, traders. Welcome to the TraderLab. I'm your host, Tom B. Thanks for visiting. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile in the intraday developing time frame. Thank you, Marty. It's based on structured trades that are available to all of you in the Bookmap Discord TraderLab community. If you're visiting in YouTube, there's a link down at the bottom. There's no cost to be part of this community. It is based on the business of trading, how the market works, why it does what it does, how at times you can get in alignment with it. And the idea is building trade plans. So you're not making it up when you're in the market, but you're specifically following plans that you have vetted, and then you bring it to the market. The thing about being in a trade is it generates a lot of emotional states, chemicals released in your brain, and you might even think about it like driving under the influence. And I'm pretty sure hopefully you wouldn't take a car out and drive when you've had too much to drink and you're under the influence of chemicals of whatever kind. And it is the same when you're in the trading environment because of the chemical release of the fight and flight response and your response to uncertainty. And if you're in a market that's 100% uncertain, 100% of the time, you are going to be triggered. So trade plans are about controlling your emotional states by knowing what behaviors actually work in your best financial business based on your vetting of a plan. And the outcome of any trade is always random. And while emotionally we're attached to the outcome of every trade, and it's almost like, we're going to live or die on this thing, and that's because of our emotional triggering, the reality is the environment is random and the outcome of any time we interact with the other participants is random. Casinos operate the same way. They're in an environment that's 100% random. 100% of the time we're in the same environment. So maybe we can take a successful business model and use it as a template in order to build one for ourselves. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. If we get into something interesting, we'll always discuss it. However, the idea of this stream is to help you understand how the market works. So what I like to do is show you how the market develops every day, what the plan might be coming in, and everybody does their own thing. Not like there's one way to trade because we all trade different fractals or time frames. So one trader might be getting long for a higher time frame swing, another trader is trading shorter time frame rotations, if you will. So there's not a right or wrong. What really trading comes down to, at least what I've found, is if you think of it like playing a musical instrument or dancing or whatever it might be. The idea is to find your groove or what speaks to you in this randomness, in these rotations. And you'll find this, and you have to do the work to find it for yourself. That's why plug and play and, all the nonsense you see out there in the internet world about the only thing you need and all that, that's just, I believe, a waste of your time. So that's up to you, of course, and it just depends how long you've been chasing somebody else's marketing. And I'm going to say that doesn't exist in TraderLab. What exists in TraderLab is a group of like-minded traders who've come together to leverage their collective experience. And then you have to craft what works for you. That's the reality of it. So there's no shortcut, my friends. It does require work, research, and I would say some good stomach lining. So let's get into today. Let's go take a look at what yesterday presented us. Now, yesterday this is a market profile. Yesterday, this presented us with a new all-time high. But let's look at what happened yesterday. Now, first of all, I got to come back here. This was Friday, and this was our target on Friday. Very important, because what we found on Friday was what? Long liquidation. So on Friday, we opened, made a new all-time high, broke down, and then we started what's called mean reversion, which is trading on the short side, just the way it is. So that was the TraderLab, and that's what we were doing. And this was our target. And the interesting thing is, this area was support. And it was the first hour's high from Thursday. And this is called a single. That's just a low volume area. The market tends to come back to these. Doesn't have to, part of the thrill of randomness. Now, then what do? On Monday, we gap higher. So what was this all about? How about Friday, profit taking, evening up, flattening out? We'll see you later. Head for the Barca Lounger. Now, we opened yesterday, Monday, here, and we have another single right here. So we open in a gap outside of value in range, and we test this. This set up longs yesterday in TraderLab, and it was long. And at the end of the stream, you saw, if you watched yesterday's stream, you saw my last trade that I discussed here was an outside and reversion trade up to the IB high, first hour's high. So it was there to there, and that was the end of yesterday's stream. And if you missed yesterday's stream, feel free. And now let's go back to yesterday. Now we know basically we ran out of our buyers, and the buyers turned to sellers, and off we went. And we closed at the low. Not so good for these longs. So what does that do for us? We have 35, 34 and a half, 35 as a potential target on the downside for today. We have, of course, this low, yesterday's low. This is a target. And then the possibility to get down to 27, 26, 27-ish, somewhere, right? So who knows? And then maybe down here again. And nobody knows these things. We're just saying this is the structure. Now let's come back this way. Now this is today, so let's not worry about that right now. Up around 35, 55, 56-ish is something called a low volume node. It is very similar to these. So what I was looking for today is to come up and either test here where that arrow is. That's called value area low, because that's where 70% of the volume took place yesterday. And this would be potential resistance. So I was set up for today, just me, my plan, not saying it's a good one. Everybody has their own plan. Mine's just one of many. In this condition, I was looking for a two-sided trade with a lean to the short side. Still doing it. And still doing it. And then you always go, what's going on? That's always a good question. What is going on? So where are we? There's that value area low, the ETH high. Now let me give you some statistics. We're opening, and here's the RTH opening lower. And this is that 55 I was talking about, that low volume node, the value area low. These are targets for upside. If we went up first, I was going to be selling this, looking to take the stops out under yesterday's low, and then coming down. Let me find where to. Can't remember. Whoop. Lost my ETH low somewhere down here. I think our ETH low is right around 35, maybe. Let me just look elsewhere, guys. I believe that's the ETH low. So statistically, we opened, hold on. I think I gave you the wrong thing here. 1 second. Okay, settlement is here. So we're opening above settlement. So it's higher inside of range, but outside of value. So let me read this to you. So we're opening in range outside of value. We are out of balance. What can we anticipate? Well, either we're going to trade inside of this Or if we get outside of yesterday's range, under yesterday's low, then it is shorts. So my inclination, given the nature of the market goes up to go down, was only short, and that's still the way I'm leaning. Doesn't mean it's right. The way I trade is not the same as the way you trade. We all trade subject to our plans. And I'm more of a bar lounger trader. I like to put a trade on and try to go for larger rotations. It pays for the stops. And just like you, we all take stops. We all have losing days. This is the real world. You're going to get the straight oil from the can here, and stops are overhead and cost of production. So RTH opened 8:30 my time. Now statistics, I forgot about those. I'm giving you higher because we opened above settlement inside of yesterday's range. There's yesterday's low. Okay, so there we are. Higher inside of range, probabilities. Getting to the overnight volume point of control, which is there. Now we're opening there, you know, so it's like that's not what we call a reach. Almost 82% probability. Getting to the ETH high, 76% probability. Getting to the previous value area low, 55% probability. Now, the fact that you got a higher percent here and a lower one there, they're just statistics. They don't mean anything more than that. Getting to the previous point of control is 68%, but it's up at the high of the day. Do you really think we're going there? Well, maybe, but probably not. Coming out the first hour's low, 62%. Coming out the first hour's high, 68%. Getting to the previous value area low, I'm sorry, I think I gave you the wrong thing here. Previous value area low, 55%. So we're kind of skewed to go to the upside, but the context, the market is long, we're skewed to go to the downside. So it's conflicted. So I posted this morning in TraderLab, just so you know, anticipate two-sided trade, rotational trade. Now, so I'm looking for a short. Just saying, not saying it's a good idea. I'm just saying, you know, this is the way this whole thing might work. So 8:30 RTH open, which is right here. So we have, if I'm anticipating two-sided trade, I have specific trades for me that are qualified and other trades under certain contexts that are not. I have an advanced process that I've shared in TraderLab called VPOC migration. In this condition, for me, I don't trade it. I observe it. I don't trade it. So that's just me. Not saying it's a good idea, just saying it's just what it is. Now, I'm looking for shorts. I open, I test here. I see selling. Now, the problem I had was by the time I'm conscious, the market is already here. And I'm in here 13 seconds. So I know now this is too high. This is called the variable high volume node. I'm going to show you. So I'm looking for shorts and I see a short and I don't have a trade. I have a regret. What's my regret? That somehow I couldn't do something that's not on my plan, but being an emotional being, you know, oh, I missed it, right? Who missed it? Did I miss it? Or did it not fit my plan? But the lunatic under the hood, who I call Hyde, has regret and feels loss. That loss, I recognize it because I've felt it so many times over all the years I've been trading. When the market moves away and I go, I wish I got in. What is that? And what does that generate? Not only regret, but it generates FOMO. Because now I'm trying to get what I should have gotten, which is not even in my plan. It's emotionally triggered. I'm just mentioning that to you because I want you just to get a sense of what's going on under the hood in my brain. And it's probably similar to yours. And maybe not. You know, we're all different. But I'm going to say we're all wired similarly. You know, it's kind of like you're behind the tree. And I don't like, you know, if you're sensitive to this, hunting, let's say for opportunity, it could be a, you know, an animal You know, if you need to bring home the bacon, all right, or it could be something else. So let's just say you're behind the tree and something runs past the tree and you're not able to dispatch that, to bring home the bacon. You have a sense, I missed it, and now you're all stimulated. I'm just a point. So this is VPOC migration. Now I have a couple choices right here. I can sell this, but this is where the trade fails. I'm opening what I perceive in a balanced area. The overnight volume point of control, which has a high probability, and the RTH open. So I'm opening what I perceive to be balance. Now, balance to me means I'm at a fair price in the ETH and I can anticipate two-sided. So I was looking for it to go up, to go down. So it just went down. So there you go. I'm going, oh, this is great. So despite the emotional wear and tear, I'm seeing the market move away. I get VPOC migration again, and it's still moving away. So I'm getting more regret. My stops are here, and this is where I would have been going if I'd gotten my trade, which I didn't get. So I'm going, well, okay, so I guess I got to wait. This is called the variable high volume node. Now, I'm going to take you to something that's a little more complex. And what's difficult about this specific scenario is rotational trading. I'm going to have to try to remember what I don't want to look at my trading workstation. So I'm anticipating two-sided trade. Now, here we cross over. This is now resistance. Why, you ask? Because this is where the high volume is. And think of it like shopping, and it's a retail price. And I shift down here, and now this is the new retail price. And you'll notice as this is shifting, I'm moving down. So theoretically, let's try to translate this. I'm not paying that. That's high volume. This is like you in the store. You got to be kidding. And you get in the car and you drive to the next store. You look at the price of the product in the next store. These guys are crazy. What's going on? And you get in the car, you leave the store. This is shopping. Now down here, which no way to know, you'll notice where's the liquidity? We have resting liquidity here. Now, the thing with liquidity that's part of the joy of trading is it could pull. It doesn't have to do anything. We can blow through it. You know, anything can happen here. Hold on a second. Something is not percolating correctly. Oh, maybe it is. It just takes time. I'm looking for these levels to come off the chart. So right here, I cross over. So I'm looking at this and I'm going, okay, if this is too high and I come back up in this area, this is my resistance. This is my support. Now I took a short here because I'm trying now. Why might I do that? Well, I just came outside of the range. I know this is too high. I have my VWAP. I have a structured trade. And this is called mean reversion. So this is my first trade. Get scaled. And then I'm looking for continuation because I have targets below at this time. This. So I'm going for this. Okay. So, and then I come across. Once this is too low, I come across. I'm out of my trade. I think I picked up a burger. In fact, it's too expensive to get a Big Mac anymore. And where's my stops? Because I'm looking for two-sided trade. So now this opening swing high is right here, right there. So, and I'm anticipating, not predicting, can't do that, two-sided trade. So this was a shot on goal. Okay, too low. Now what do I do? Watch. So now I'm thinking, where's the stops? If I'm in two-sided trade, we can reverse, come across the range and squeeze out these early sellers. And then I've got to look up here. And I'm looking back at the open. And I'm still looking at ETH high and value area low. That's what I'm doing. Because I'm clueless. I don't know how far it's going to go to you. If you do, come to TraderLab. I see a buy sweep right here. I'm going through this liquidity. I've got my icebergs. I don't know anything. I do know that the market could come up, take out the shorts, and if that's all it is, and there's the stops coming out, 199.35, there's all these stops are coming out. And now I get a buy sweep. Now a buy sweep can suggest, and that's all it is, the potential for a counter rotation. So I'm still oriented to the short side. I don't want to be long because I know the market is long. I want to take shorts. And if this is only a short squeeze, then I'm going to be looking for short continuations, mean reversion. So that's me. I'm not saying it's a good idea. I'm just saying it's my plan. I stick to it until it doesn't work. And when it doesn't work, what that really means is I've defined a change for me in my fractal or time frame. Here's my sweep. Here's my micro high volume structure. Right here, I have my sellers, no clue, but this is a big deal for me. Right here, I've got my buyers here. So I've got sellers, buyers. Why? Market went up. Break low. This now is rejected. I'm now in something called a fractal. And I'm at a variable high volume node that was too high. Remember, I'm not paying that. We left. Well, if I squeeze, is this price still too high? So this sets up a short for me. And I'm trying to go here. Let's look at the entry, by the way. Now, this is kind of structured in the sense of how you design for yourself, how you do this. And in TraderLab, it's not what I do at all. I'm not saying what I do is a good idea. I'm just saying this is what I do, and I am somewhat or very much process oriented. I just do the same thing. And I do the same thing because after many years of fiddling around, I found that if I'm consistent, I can measure it. If I'm making it up as I go, I'm pretty much playing a video game. And in the end, if I can't anchor my inputs, then I'm just going to have garbage. And I can't measure garbage. I can get garbage, but I can't measure garbage. When back in the day I was using indicators, and I'm not saying you don't or shouldn't. I'm saying I don't use them. But when I was using indicators, I used more than one, of course. I used multiple indicators. But the thing about the indicators was some would, some say buy, some say sell, some say I don't know, and they're in the middle of whatever. So it was random as far as the inputs went. And I had winning trades also, of course. So I thought that I just had to tweak and tune, that kind of thing. But what I found out was that I couldn't measure what I was doing because I didn't know if it was just random or if I actually had a process there that was profitable. And what it turned out was, no, I had a random process and everything's profitable randomly. So I had to start removing things. And that was very difficult. So anyway, this is your short entry. And this here is another short entry. You can see the structure, right? Right here, buyers, sweep. Buyers are there. High volume is here. Sellers take control. Oh my goodness, it's getting away. FOMO, entry. Let me show you another micro entry. It's going to take you a little into, I call these fractals. And because they're not time-based, and most of us are all about the clock. Oh, I'm using a 1 minute. I'm using a this. I'm using a that. What does the clock have to do with what happened right here? So short microstructure. Sellers are see how the sellers are taking control. Sellers to here. Now this comes up here. Teeth chatter for 30 seconds because it could do that or come back here. So this is a short. This is a scale. And then again, I'm going looking for this. Get that one. VPOC migration. Looking good, Lewis. Now this, 63.22. Let's just come back and take a look at this. Stops are under there. And what was this? Too low. So when I'm coming back here, I'm going for the stops under here, but I know that I had a lot of absorption down here. So it's a target. I have no idea. Remember, I am clueless. It's not my job to be right. It's just my job to follow my plan. It's about as good as I can do. Now, right here, I get something called VPOC migration. So I've gotten my fuel out. My next target, and I had an order out right here at 15. So I was looking for it to come. When I say looking, it's just a level on a chart. You know, I'm looking for it to potentially come out in this area, and then that would be about it. But my stops are here. So everybody can kind of see what I'm trying to do here. So this was all fine for a while, and then things started to change. But I saw it change, and I'm thinking to myself, well, I've got my fuel out, so I can get my short covering. Now let's look at the difference in behavior here for a second. Too low, retail, watch. Now this is the auction. I'm following. This yellow line is the retail price, highest volume. And if you're in this store, a fair price is where buyers and sellers agree to do business, and that represents high volume. But the thing about our market is, since it's in real time and the prices are auctioning continuously, this changes. This might become too low. This becomes the retail price. That was too high. This was too high. Stop pick. Where do I come back? Here. Too high. Don't know. Then where? Back here. Then where? Back here. VPOC migration. It's below there. It's below there. And hasta la vista. Thanks for playing. We'll send you a coupon to the buffet. Now, too high. Okay, let's keep going. Now, VPOC migration. Too low. Now I'm looking at this and I'm going, well, we're outside of yesterday's range. Okay. If I'm outside of yesterday's range, I'm outside of value. I'm under settlement. I'm under everything. I'm under this naked volume point of control. For me, it's only shorts. Now, other traders in TraderLab are taking longs, and I applaud them because they're following their plan. Now, for me, I'm looking at this and I'm going, okay, let's change we just changed the direction, didn't we? Now this is too low. VPOC migration. Right here, I'm looking at this and I'm saying as well, if I hold this, then I can move higher. Right here. So I'm still looking to sell it. VPOC migration. Where is support? There. And look what we do right here. Just follow the yellow brick road. That's what I call this, the yellow brick road. So what I'm seeing is a change in behavior. So now I'm still looking for shorts, but I have to do it from a higher level. Just me, not saying it's a good idea. It's just what I'm doing. So my next trade that I'm looking at is called a VWAP to VPOC. So it's a reversion trade. I'm still trading something called mean reversion. The joke in the TraderLab is, yeah, it's mean. So here, outside edge, low volume area, I'm looking for it to come here and to take a short to come back here. So it came here. I'm going to show it to you. I see liquidity come in the book. I'm seeing my icebergs. I'm seeing, whatever's going on here is going on. So right here, I get below my buyers. This to me is delta divergence. You can see the buyers, and I get a little bit of selling. I get a buyer, and then it looks to me like we're going to break here. I'm at a location. I take this, I take a stop. Okay? And of course, we don't like that, but it's just part of the deal. Now I come up here. I remember this is where, yeah, 9:30. So 9:30 Central Time, my time, we have something called the IB, the initial balance. And the initial balance, there's about a 98% probability we take out either the first hour's high or low. And I'm kind of, as they say, perplexed. But we're outside of yesterday's range. So as long as I'm outside of yesterday's range, I'm still taking shorts. So here, I get the, I think the mid was, yeah, the mid is here. So I get the stops at the mid. I come up. Let me show you. And I get my sellers here. So I'm above the mid, I'm above the VWAP. So I'm starting now to look more at the profile. So the profile, if the retail price is here and I take a short, I'm trying to come back across the range to come there. So these are reversion trades. This is a back to there and out the bottom. This is the same trade from a different location. So this is a short. Let me show you. Now these are, I would say, a little more difficult because you're trying, in mean reversion, you're trying to pick out side edges. And I find it, for me, it's my least favorite condition, if there is such a thing, because I take more stops in reversion trading than I take in other conditions. Here, let's do this. Let me show you the structure. Now we have microstructure here, but this is really the structure I want you to look at. So, make sure I'm still cooking. Okay. So this here, I come up over to liquidity. As far as I know, we're going to the moon, but I'm still looking to fade. I get a trigger here. Here's why. Sellers are here. They are absorbed. See the red delta? Why aren't we going down? Because there's a buyer here. Green delta, aggressor, is above the seller. Green delta, going to the moon, right? Up here, going to the moon. No way to know. Here, sellers are below these buyers. Sellers are below these buyers and these buyers. That's a trigger for me. Now, where did the sellers take over? There, and here. This is the high volume. It's like a VPOC or the retail price in this auction, and I break away from it. Now I have a trigger. So I have a trigger, and now I'm looking for a pullback for a short, and I'm trying to go there. I get scaled, and I'm starting my lunch. I should say my breakfast is starting to churn. So let's look at what I do. I get short, I get scaled, and I'm going for this. I come back up, ETH chatter. I see this. I think I'm going to make it. Come back up. And I'm like losing my mind right here. So right here, I come up. My stop is above here. I get taken out. Just telling you, I get taken out. I thought I was okay here. I get taken out. I get another trigger. I get short again, and I'm going for here. And I'm starting to grind my teeth. Just telling you. I get VPOC migration, and I'm going, I think maybe I have a problem here because I'm getting conflicted. I'm saying, well, the volume point of control is moving against me, but I'm still outside of yesterday's range. The volume is moving. Since the volume is moving against me, it is saying that these levels might be too low. So as this thing is coming up, I've been selling it, but I'm noticing I'm not getting back here. And then I get this. So this presents a problem because I still want to be selling it. But as it's moving higher, where I can potentially sell it is moving higher. So I'm getting, as they say, perplexed. Look what's going on here. Big chop. That's it. So that's it. So when it's all said and done, it's just like, all right. So let's see let me get some more levels on. And hold on one second. You guys have questions. How are we doing in YouTube? Yeah, Banana. Hi, welcome to TraderLab. The link in the bottom of YouTube will take you to the Bookmap Discord server. TraderLab's in the Bookmap Discord server. There's no cost for it. In fact, all the education in the Discord server, stocks, options, crypto, order flow, you know, algorithmic behavior, market maker behavior, the rest of it, there's all no cost for it. So there's a lot of education. It's all available, no cost. All you got to do if you're visiting in YouTube is you do need to verify your Discord user name with your email address that's registered in Discord, and you'll get a code so we can keep the the riffraff out. Hope you guys that makes sense. And you're all welcome, by the way. And by the way, the TraderLab is a group of like-minded traders who come together to leverage their collective experience about the business of trading. So right now, with this, nada, Zippo Park in the Barca Lounger. So, for me, kind of the way I look at it. I'm just trading my plan and my fractal. I tend to stay with what I perceive to be larger rotations. So I'm always thinking about, positioning for large rotations. I'm not a quote scalp bearer. I use microstructure for triggers, but what this is telling me is there's just it's short time frame traders in control here. And this is when you see these kinds of rotations, you can very easily do damage. Let me move this over. So I'm actually glad I'm streaming here at the moment because it's a lot of wear and tear. But once I get into this kind of stuff and I see this, I don't bother because I cannot, by the time I get in, I need the range to get risk neutral. And for me, my stops tend, and it's just me, run anywhere from 2.5 to 4 points. And typically they're around 3, so, but if I have something and, I get something excessive, it blows up and blows down, and then I have an entry, and my plan allows me to, because I'm trading for bigger rotations. So that's why I can do that. When the rotations get shallow like this, it's easy for me just to throw dollars out the window, and that's kind of not my thing. So I just then wait. And if I don't take another trade for the day, it just doesn't bother. I'm just patient. It's kind of, the thing about this is defining the condition of the market and then also having a definition of change. So I did see the market changing. But for me, until it really was not too problematic. But what I'm not getting here, in other words, I do this and I don't come here. That is a bit of an issue for me. I come up here. You notice. Now, let me tell you why it's not going there. These are distributions. So, in other words, too high, too low, retail, high volume. And that's where this variable high volume node is. If I leave it and the high volume moves, it's saying potentially this is too low. So now I've left this. Now I start another auction, which is this one. Too high, too low, too high, too low, retail. And I leave it. Now I'm up here. So what I'm observing is And this is really what the profile is telling me. It's really about the auction. Too low, too high, retail. Too low. Everybody leaves. You can't buy an S&P down here anymore. Now we move up. Too low, too high, and it's what we're doing is the auction is really consolidations. It's sellers are here, buyers are here. The high volume is the retail price. If this price is too high, we come back here. If it's too low, we come up here. Then what I'm thinking is, well, if we come out here, if this becomes too high, I can come here and check it. It doesn't get there. Instead, the volume moves higher. Too low. So what's happening is I'm leaving these behind. And as I leave them behind, it's creating new structure. This up here is an outside edge, a low volume node. I don't see it in here. Let me just check, make sure that they are here. One moment. One second. Just checking my IRT, which is the higher time frame software I use, exports levels. But so they show up here in real time in Bookmap. So you're seeing the high volume nodes. That's what it's measuring. Where's the high volume? That's the price, the retail price. Think of this like shopping. The outside edges are low volume nodes, and they're not showing up here. I just got to see if I got a setting correct over here. Maybe not. One moment. Okay. All right, those levels ought to come in. Call it a adjustment. All right, let me come right. I just got to click a couple things over here so I can see the chats. You guys have questions, by the way? How are we doing? So this is not a fun day, but it is what it is. Low volume node is here, outside edge, outside of yesterday's range. This is a difficult trade. You can see we are respecting this level. This is potentially too high, and the outside edge, the low volume node, is up in here, stacking liquidity. If I wasn't streaming, I'd take this short, and I'd be trying to come here. And there. So this is what I've got. I'm out. This is the important piece so far for me. I'm outside of yesterday's range. So I'm still leaning to the short side, but it's very conflicted. I feel more like a purse snatcher here because of this. So let's see if we can get back here. This is very difficult. I can tell you that these are trades for me. The problem I have in this is the range of the rotations. This is just chop. So, and I'll tell you, for me, it's very easy. If I take these, I have to be really, really careful and precise for location because I have very little range, you know. And I typically, what I try to do, if my stop has to be out here, I'm going to use structure for triggers. Stop is out here. So the range from here to here, you know, which is about 3 points, I then need a 3-point scale to get risk neutral. You can see it's very tight. So you know, now structurally, this is my trade, but there's just nobody in here. It's just us, really. So let's just watch this one. There's my outside edge, my low volume node. I know there's going to be stops up here. And if I get into yesterday's range, I can still come out the top, which was my plan from the morning. If we come out here, remember, there's over a 90% probability we take out either over first hour's high or low. The market is currently short. That can take us up into here. So, you know, shorts I think are pretty risky here now because it looks like the buyers are taking back the ball. So to me, it might be just a smart play given these rotations, just to be in park. So we got down to here. That's a pretty nice move, I think, considering we had the open there. So that's okay. Now we're coming back, and the possibility is now to come up here. So my targets from the other side, if we come out the first hour's high and get back into yesterday's range also, because now where are we trading? Let me just look at this, 35. So we're trading in here. So if we get back into this range, then I'm looking at up here. But we would have to come all the way across this range and take out this high. So tough trade. It's not, it's we got the longs out from here. The thing we have to be careful about is higher time frame is bullish. It's a bull market, maybe, if you think about it that way. And what the market does, the market goes up to go down. The market goes down to go up. The market goes up to go down, takes these longs out. You need to think like this. And then the market can go down, get shorts in, go up, now squeeze the shorts. And I think that's what you're seeing. So that's what we know. If you're in TraderLab, you would know this. So you could be looking to squeeze these guys out who are short and get back in alignment with the higher time frame. And you'd be looking to come up in here. And my targeting from the open was to go here to go short. Well, now, if we took out the sell stops, now we can be looking to squeeze the shorts and puts these targets on the table. But that's it for me. So I have nothing else here that I would be doing from this location. I got nothing to do. So I wait. You guys have a question? How are we doing in YouTube? Please give a like if you find this interesting. Today is just what it is. This is our job. Get in alignment, and if the condition changes, just put it in park or turn the barge around. Looks to me like we've already accomplished our downside. We got our targeting. We did have another target here, and an extended target down here, but the real thing is getting the longs out. So now we have shorts, so we can go back up. So that's pretty much it. So in TraderLab, we have traders on the short side. We have traders on the long side. There's probably traders that are holding long or taking longs here. There's other traders that might be selling. For me, there's no shorts now. And everything is suggesting the potential. That's all I got is potential to squeeze. So we'll see how it plays out. In the meantime, let me show you some things. In the TraderLab, there's 60 PDFs of these structured trades that I'm discussing. And it's not plug and play. When I created these, I'm not a vendor. There's no course. It was because traders were asking me what's going on? What are you doing? And so I started posting these. And some of this also is research. These were never meant to be posted, like they are here. But I had put them together. And this is research that I was working with Bookmap developers. And some of this has some value and some of it doesn't. Most research we don't do anything with, But these are actual trades. And there's others, of course. These are live trades I took with explanations. Now, the idea of this is not that you come in here and you go, do this. I am trading a specific rotation and plan, and there's more to it than what you see in these examples. These are just screenshots of Bookmap, which is really where the rubber meets the road. But this is overlaid on other processes, which I do have been showing you. And if you follow the stream, you see me go over higher time frame. So it's fractal. What is a fractal? You guys think of time frames. To me, there's no time. There's time in the RTH, open, high, low, close. Once you're outside of RTH, you're not in the clock anymore. You're in the behavior. It's just a personal thing, because I used to try to fit the market in a box using the clock, 5 minute, 1 minute, 15s. It was all wonderful. But that's not what happens in order flow. Order flow, we're looking at the nuance, and we can open Bookmap up and really get in there with the scalpel and observe the microstructure. So that's what I do. So, and I didn't do it earlier on in my trading because we didn't have order flow. So this is what's going on. This is what the TraderLab looks like. It's a community of traders, and everybody does their thing, and it's professional. So this is not romper room, and everybody is and let's just say expected to behave appropriately. Very interesting. There's also a library of webinars, and thanks, Ned, for curating this for us. This is the primer webinar. It really gives you a high-level overview. It's got about 34,000 views. You might want to check it out. Meet the TraderLab. What is the TraderLab? This is an advanced trader methodology. TraderLab is really a group of traders, and it doesn't matter how long you've been trading. Our senior trader has over 50 years experience, me, 46, and professionally and out here with you. And also, we do data mining, and there's a lot of research and camaraderie and mutual support. There's too much work to do for somebody to sit under a rock somewhere and think that they can do this by themselves. Now, maybe you can. That's great, but it works much better, I think, if you're working as a team. Now, also this one, stop gambling, start winning. That one's important because we are all taking risk. But depending on if we have a statistical edge, determines which side of the table we sit on. Are we sitting with the gamblers, or are we sitting with the house? And the idea of a trade plan is statistical probabilities. And if you look at the way casinos operate, they only play games with an edge. So if we look at our structured trades, I think the way to look at them is they're just games with edge. And the difference is casinos pay to gamblers, and they're not emotionally attached to any individual hand. They just deal the next one. Because the only way they can get their edge and extract the dollars from the gamblers is to deal the next hand. And what we do, because of our primal wiring, is we want to avoid risk. We're looking for certainty. And if we take a stop, let's just say you take a stop here, and this happens to be the trade that's going to go to target, and you don't take it, and it's I'm not saying it is a trade you should take. I'm saying, and it's part of your plan. And because you're mentally and emotionally over here, you don't take this trade, and this one works. What have you just done to your edge? You're skewing the stats, and you're not following your plan. That will put you out of business. If the casinos, every time they paid a gambler, didn't deal the next hand, well, how would they ever get their edge? It's very important to understand the business you're trying to be in. And it's very counterintuitive because we grow up outside the trading world in a very structured world. Red light, green light. Behave a certain way. You go through a red light, you can get a ticket or worse. You're looking for approval from parents, from educators in business. That's all approval. What about here? If I take a trade and I don't get approval, do I not take it next time it shows up? If this is my plan, I'm not saying it's a good one. I'm not even saying it's a plan. I'm saying is, what do you do? This is the challenge. I believe anyone who comes to TraderLab can learn how to trade. But here's the reality. We all take stops. We all have losing days. We all hit our loss limits. Whatever can happen, happens. Why would you, if you took this trade here, Would you bail out when you see this? Or would you say, well, this trade doesn't fail until it gets over here, and you ride out these rotations? You see what I'm saying? What would you have done? Very important. What would you have done? If you bail out of this short from here or here because of the counter rotation, you're being manipulated by your emotional triggers, not by the business. We're all fearful. I'm doing this 46 years. What happens in the world of uncertainty? Imagine somebody, and this is kind of weird, just a weird analogy. Suppose somebody put a box on the table, and there's a hole cut out on one side of it. And they say you can put your hand in the box, but there might be a scorpion in there, or there might be an ounce of gold, or 10 ounces of gold, whatever it is, would you put your hand in the box? That's risk. So what would you anticipate? Well, I don't want the scorpion. So you don't put your hand in the box. Well, right here is the scorpion, our fear. What happens here? You see? How do we know the difference between this and this? How do we know if we take a short that we're not going to get stopped out? And what happens when you see this or this? You hit the exit here. We've all done it. Why do we do it? Fear and avoiding risk. And we're wired to run from risk. That's why we've survived as a species. Oh, saber-tooth tiger, I'm out of here. I'll send you a postcard. In the meantime, the business of trading is about intelligent risk and the willingness to pay the other side in order to get the opportunity. What is different about this and this other than it picking? This is a stop pick, I call them. What do I know here? What happened here? Why was this in the book? If you understand order flow, it was to skew the book. Now they cancel. That takes pressure off the book. Now we don't know, right? Do you? I don't know. What's it going to do? Well, if I'm following my plan and my outside edge is there, I'm now trading this mean reversion. And my outside edge is out here. If I get below here, my next high volume node is there. If I get under there, my next low volume node is here. I can sequentially operate in this. You do remember I was saying I would have a short up here, but I also, because of the range, I wouldn't take it unless I can come outside. And I'm not going to say what I would do so much. I really don't want anybody to take trades I might take or might not take. That's not the purpose of this stream. The purpose of this stream is to help you understand market mechanics and also the problems we have as humans operating in randomness. And that's typically what drives us to seek certainty. And we all do, or did. I don't anymore because I've figured it out after, unfortunately, too many years that it's always uncertain. So if I can't have certainty, then I'm not going to try to solve for certainty. I'm going to try to solve for uncertainty. Is that logical? So this is the structure. And all we did was come up and pick. And now, where's my target? It's this. Why would I come back here, by the way? Because this is too high, and this is the last place. It's too low. This is my target, variable high volume node. Now, this is a structured trade in TraderLab to come back here. The reason it tends to work is if we can identify too high, wherever it is, here. So what do we have here? Too high. I think it shifted. Too low. Break. Back to this. Too high. Too low. Back Squeeze, no way to know. This is your resistance, and either it's going to do this or break. When it breaks, you can sell it, and you're going for this. Now, we'll see if it does it. Now, these are structured trades, and I'm going to tell you, it'll make you nutty, and this is not a great day. This is, for me, a difficult day to trade. So I end up taking more trades in this, more stops, but I also am working on this kind of ranges, because I need 10. When I say I prefer the opportunity to get the larger rotations. And that's why I can afford, unless I hit my loss limit, which I do at times, to take more stops. And if I keep getting into chop, 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 and I'm not getting scaled, I hit my loss limit, I just go, well, doesn't align with my plan. It's not anything more than that. How do I feel emotionally? I'm not thrilled. Why wouldn't you? But my plan over a large sample size works. And as long as I follow my plan, no matter what the outcome is on any individual trade or any individual day, it works for me in the way I trade. So every trader who comes to TraderLab, it's not plug and play. I'm sure you guys have been to chat rooms and followed the quote influencers, and I'm hoping if you get influenced, that you don't get influenced in that way, but that whatever you pick up anywhere, it isn't a mass of information that creates certainty. It's not like a smorgasbord. It's really, I find, it's tearing it all out so you have a very basic process so you can operate in it. If the market is random, you really need simplicity in order to make decisions. When you have conflict, then you will thrash. And that's what typically happens to us. Well, should I do this? Should I do that? I got enough of that maybe anyway. The best you have in this is maybe. Maybe it'll go up. Maybe it'll go down. Maybe I'll get risk neutral. Maybe I'll take a stop. Maybe. That's all you got. Maybe. Maybe I'll get here. Maybe I won't. So what's your trade management plan? You got this thing. You'd be risk neutral. Then what are you doing about it? What is this? What is this? Absorption. Don't know. 295 stops coming out. Thanks for playing. You get a coupon to the buffet. Right here is where the sellers were. Right there. And the buyers are here. No way to know. Let me show you. Now, this is something you can vet for yourself. Is this a potential trade management opportunity? Let me try this again. I'm going to show you structure. Now, everybody has to kind of figure out and do their own thing. Let's watch very closely. So, too high. Now, the idea of this was to try to get out. Where was it? There. I'm going to put a little line here just so we could see where it is. This is the target. There is the target. So if you took this short, it's coming back to this high volume node right there because it was too low. Think of it as support. So resistance, I'm not paying that. Let's check the price down here. Buyers are here. Sell stops come out. And this is a buy trigger. Now, it doesn't necessarily mean get long. It depends on your thing. For me, if I had a short here, I'm going here. And then this is a reversal. And this becomes my micro support. If this is too low and this is too high, if I get below this, I'm now continuing on the short side. I'm still outside of range. I have had no longs. Not saying that's a good idea. I'm just saying, that's it. Just trade from any side you want. Doesn't matter. Trade from both sides. Doesn't matter. There's not a right or a wrong. What there is where's your groove? How do you define the condition of the market? Now, what do we know? The market is short. The higher time frame is up. It's possible remember, we cleaned out all the longs. We got down under here. So the longs in here, and those who had, so the stops that were here, stops that are under here, these guys are gone. Now, if we think the higher time frame trend is up, it's possible that now that the longs are out, blown out, and we have shorts in here, that now we have our buyers built in here, buy stops, and that the absorption was down here. And if I can't get back out here, then I can squeeze and come back across here. That's what I know. How it does it do it, no clue. Not my job. So what I do is I am trading chunks, like pieces of an auction. So I can go from here to there, and if I don't get under there, I can come back here. This becomes, I'm trading fractal reversions. So what is this? A short to there is a reversion. A long from here back to here is a reversion. Is the trend up or down? You can trade from either side. I think the trend might be up, but I trade from either side. I tend to trade from one side. But what I do know is if this is too high and I test too low, I can come back here. So you can pick your side. And as they say, act accordingly. Are you guys with me? The VPOC starts at 0 at RTH open. I'm getting a question there. And then it just tracks where the high volume is as the day progresses. So it moves around. And the idea of this volume point of control is where's the fair price? So the auction is always going, what do we think about this? Well, what about this? That's too low right now. And it doesn't mean we won't come back there. It just means right now this is the fair price. So in mean reversion, which is, I trade a lot of mean reversion. Reversion trading is outside in trading. Now the problem, of course, is, where's in? Where's out? So if I know this price was too low because I left it, I have choices. I can trade longs from there to there. I can trade shorts from there to there. And let's go back to the premise. Higher time frame up. We've blown out the longs. Right? Pick the stops. That's fuel. And if I don't get selling below, then I have my shorts in here and I can squeeze. If I squeeze, which I can do at any time, and who knows, I can come up out here. This is possible. So, and also we never have to do it. It's just trading. So I can't predict anything. What I attempt to do is stay in alignment with what I perceive to be the dominant side. And at the moment, who is dominant? Short time frame, two-sided trading. Higher time frame, buyers are dominant. If I get the longs blown out, let's go back, see the story. The market's trend up, higher time frame. Intraday developing time frame, the market is long. Yesterday and Friday, the market was short. Sell stops are under Friday's low and yesterday's low. We closed yesterday on the bottom. If you're hanging out long, you're looking for the exit. We got the exit. We got the longs out, and we got new shorts. Who now is on the hook? Do you think it's the longs or do you think it's the shorts? Why don't you guys post? By the way, there's no right or wrong because we won't know until hindsight. What do you guys think? Then is this to this qualified? Only if it fits your plan. You know, for me, all I can do when I have structure is anticipate what it might do. I'm not in the prediction business. I'm in the alignment business, and I can't tell you what it'll do. I do know I had buyers here in absorption. That's what I know. And I know this was too low. So now I got to see what happens over here, especially right out here, because I had buyers here. So what often happens and what retail traders tend to do is put their stops right here. I don't do that because if there's stops here from the longs in here, it is very possible I can pick them. I call it a stop pick. And these buyers who absorbed this selling will come back in. So it can go bling, bang, and then still come across. So we're going to see what it does here. It's not a trade recommendation. It's just possible. The kind of the mix of this whole thing is we're outside of yesterday's range. So subject to how you perceive context, you might only be taking longs, one possibility, or you're just trading the rotations. And that's as deep as it gets. Being aware that if we don't come out the bottom, which is there, that there's over a 90% probability we take out either the first hour's high or low. So I'm inclined to look for this, but I also know I've got shorts. I'm completely conflicted in the sense of what it will do, Ben. So I just trade structure. You know, when I'm in this scenario, I'm just sort of, it's kind of like a subway purse snatcher. Boom, out. What's this? If the buyers show up here, you see the buyers, the buyers, the buyers, the buyers. I got buyers here. If I don't take this out, then I've got stops here. If I get above here, then the shorts in this leg become buyers. I can come here and I can come out the top still. So that's about it. I'm clueless. And that doesn't mean ignorant. It just means the condition of the market is two-sided, and that doesn't tell me anything other than if I look at it from a somewhat higher viewpoint, knowing I got my longs out, the market is short. So if the longs are out, are they going to come back in? Maybe they are already coming in, because are we seeing accumulation on the counter rotations? And what is the volume point of control telling me? This is moving higher. It's a very mixed bag here. So we'll figure this out by the end of the day. I don't want to say I would bet, but if I'm just thinking about trend and context, I would suspect that if we get back in this range, we're going to squeeze. But that's as deep as this is. So if I'm kind of mixed on the whole thing, I could just be working this, or I just don't trade. You know, I'm just, doesn't matter. You know, there's a lot of days to trade, and there's some days that are better than others. This is, you know, look at this range. Again, this is summer trading in many ways too. You guys have questions. This is all I got for you today. You know, some days we got a lot, and some days it's, this is what it is. Can't make the market. Shorts are in control. Okay. See, 4-lat high is saying shorts might be on the hook. Exactly. Who's on the hook? Everybody's on the hook today. It's rotational trading. Equal opportunity to get abused. I suspect, and this is very much not a trade recommendation, that we're going to see a short squeeze for the reasons I've already stated. Now, the question becomes, if you think there's going to be a short squeeze, where would you get long? And we could just as well fall out the bottom because we're outside of yesterday's range. So it really just presents its own little problems. And we got earnings, don't forget. So there's a lot of stuff going on in here. So you guys can watch this. I really don't have a sense of any sense of it, other than I can operate in this. But here's something I've figured out for myself over many years. When I get into short rotations, my risk doesn't go down. My opportunity goes down. So I take the same risk to go from there to there as I do to take a 20-point trade. And nothing says this won't turn out to be a 20-point trade and fall out the bottom. But I've figured, at least the way I like the trade, like yesterday's trade, I think I had 3 trades yesterday. And it was a really nice day. How many trades do you need? The reason yesterday was a good day for me was the range. When the range compresses, I take more trades, which means more risk and less opportunity. So we got to just not be mechanical. We got to look at the condition of the market and really think, do I want to trade in this? And it's really, do I want to put risk on? Well, not that I can't, but I'm working pretty hard to go from here to here, I can tell you that. It's not going to, you know what I mean? So at the end of the day like this, I get a coupon to the buffet because my broker is doing really well today. And for me, it's going to be scales, scratches, stops, some winning trades. When the debris settles, it's kind of like I should have slept in. Just the nature of it. Remember what we're thinking here. Too low, potentially too low. Retail, squeeze, right? And it's not a recommendation. It never has to do that, you see? But the point of this is, and this is kind of where you need to think about how the market works. Trend day here, support here, Friday, gap, run amok, new all-time highs. This is the retail price from yesterday, too high, close on the low. How do these guys feel? Not so good. Open, and again, looking for this to this or whatever. Open, straight south, counter rotation, shorts to here, and then maybe lower, but not. So if we got shorts here, but we're outside of this range, this is important, then we can rotate, but we got the paper out, the sell stops. So if I have shorts and I have no sellers now, what am I going to get potentially? Short covering. They become the buyers, and new buyers may have absorbed down here. Now we got to see. So as they say, the court is out. But if we get rolling, we come back in the range, then I'm looking up in here. Well, that's just kind of where your plan comes. And let's say you think it might be longs now. Where would you be getting long? Here's the question. Is this where your long is? Or are you just taking the shorts? Which is it? So I have some traders saying shorts. I have other traders saying, I don't know. Because none of us know really. But if you step back from this and ask yourself, where's the fuel? Write that down. The fuel are the traders on the other side. And it's really important to always think about rotations and how the market works. The market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go up. Where are the stops? Here. The market goes up to go down. The market goes down to go up. The market goes up to go down. We don't take them out. Absorption. The market goes down, go up. You see? And let's take the concept to a higher time frame. Market goes up to go down. Market goes down to go up. The market goes up to go down. The market goes down, go somewhere. See? So in all fractals and time frames, it's the same concept. Market goes down to go up. Market goes up to go down. The market goes down, goes here to go up. The market goes up to go down. The market goes down to go up. The market goes up to go down. See the swings? And there's stops on both sides. So the shorts get squeezed here. The longs get squeezed here. Goes down. Goes down to go up. Goes up to go down. Goes down to go up. Goes up to go down. Goes down to go up. Squeeze. Goes up to go down. Support. Goes down to go up. Goes up to go down. Support. Now what? See? Maddening, you know. So if the market goes up to go down, do you think we've got our down done? I do. But it doesn't mean anything. What I think is immaterial. What does my plan tell me to do? My plan tells me to get in alignment and to define change. Conditional statements. If this, then that. If not, then what? If this is too low, if this. And I had a sweep here too, by the way. So this is material. This is my support. This is my resistance. Where's my fuel? Here, right? And where's my outside edge? It's there. If I get through here and in range, squeeze the area, right? Hope this makes some sense. The thing about a day like today is you need a specific plan for this type of condition. And in TraderLab, what we attempt to do is have different plans for different conditions. And they need to be defined conditionally. In other words, if this, then that. If not, then what? If this, we don't go below it, then that. If I come here, so if this, then that. And if I don't take it out, if not, then what? Then that. If this becomes too high, if this is too high, then what? Then back here. If not too high, then what? Then across the range. And if I come across and squeeze, again, I'm looking for this. And I'm looking for, when I say I'm looking for, I'm saying these are just, it can potentially come out here somewhere. Or even up here, I don't know. But just saying. So the TraderLab is trade plans. Now let's say you don't have a plan for this. Guess what? You sit out, you watch, you research, you narrate. I'm continually narrating the market. I can take a short from here to here, but I know when this happens that I don't want to be taking any more shorts. And it was here. Now I suspect, as I've been saying, is that we've got the shorts in here and we're going to squeeze because that's the trend. And whatever it does, it does. So you guys will get to watch this and see if we can come across now, because don't forget, we have over 90% probability take out first hour's low or high. Let me just check something here. Where's the ETH high? 63.52 is the ETH high. We took out the ETH low. There's not a high probability of getting back there. The probability of taking out both the ETH high or low is not high. Let me find it for you. About a 33% probability. So it's not huge. We can do it. But if we don't take out the ETH high, we can still come back up in here. Take the first hour's high and get here. This is kind of my area for targeting on the long side. And it never has to get there, you know. part of the thrill. But I'm going to leave you with that. Do you have any final questions? I got about 4 minutes. And now, if you find this interesting, and today's not one of the days that are interesting, today's one of the days where it's a lot of work. And I don't find these days, really that rewarding. They can be, but I take a lot more trades, so my cost is higher. And I always look at it like if I'm putting risk on, I really want to get paid. When I get into these short rotations, I take a lot more trades, and that really means I'm taking a lot more risk, and I'm not getting paid for it. So I have to be very careful, and I just really, when I find my range is compressed, I just have to be really patient, careful, and not overtrade, because it's very easy to get caught in this flipping like a flounder on the dock. Short, long, right? You're in rotation. It'll do that to you. I tend to pick one side and stick with it until I get a lot of evidence that I'm changing, that the behavior is changing. And I'm still in a rotational trade. I do have a somewhat long lean at the moment because of the shorts being in here, but it doesn't have to do that. So in this configuration, it's really just get in, get a good piece, trade the targets, and just try to build it that way and not try to hit a home run. Just trade the structure. That's about it for me. I don't try to do a lot more than that with this. If you're interested in TraderLab, and this is about the business of trading, and remember, we all have days like this, and the market, it's the condition of the market. You need to know where you have an edge. You also need to know if you don't have an edge, and you need to sit out. You're not here to play the video game. You're here to wait for edge. And if edge doesn't show up based on what you've vetted, then you just don't have a trade. The idea of the TraderLab is to help traders build the business out, because we don't want to come here and start deciding what to do. All the decisions are already made. You just bring your plan here. And depending on the condition of the market, you may switch plans from directional to rotational. And a rotational plan operates differently. The trade management operates differently. Triggers are similar. Locations can be similar, but in this context, you have to be very, very aware that fading might not be the appropriate thing. Maybe getting long might be the appropriate thing, but you need to know where you would do that. You need to define the condition of the market and try to define if it has changed. Do we want to be long only now, or are we still going to take shorts? Your plan defines that, not what you see happening now. What has happened, which is defined, is conditional. And if the condition changes, it's like flipping a switch and a different plan comes out. That's what the idea is of having a business plan and only trading when your edge shows up. And we all get out of alignment. We all take stops, and we're always trading what is the perceived context, and we won't know until hindsight that it has changed. That's just the nature of it. Please give a like on the way out. If you're interested in TraderLab, use the link in the bottom of YouTube. It's available to everyone. There is no cost. There's a library of webinars, as well as 60 PDFs of structured trades. You can review those, reverse engineer them. TraderLab is a great community. It is for the business. It's about the business of trading, and it's a serious community. Thanks for visiting the TraderLab today, guys. Look forward to seeing you soon. Please leave a like on the way out. Take care, everyone. And thanks again for visiting the lab today.